Okay. Share audio. So I'm sorry, I don't know if I'm flying through this content.
No, it's cool. It's like just tweaking it and making it better because I'm asking you now as I don't understand it. And then ultimately I'm still going to do it myself and then revisit your videos and see the answers and maybe see from there what I did wrong.
And that's the way you do it, man. That's exactly how you do it.
Like I said, I can also say, like, I haven't been applying myself completely seriously, but I know that so far not been any lecturer's fault. That's been on me.
Yeah.
And second semester, especially if I get through all enough, I'm going to apply myself.
Let me just click on this here. Okay. Right. All right. So now we're stepping into question 6. Question 6. And in question 6, they're now taking us to the salaries and wages. And here you can see this is 30 marks. A good 30 marks. So, you guys, this is where you really begin to clobber your marks. So remember I said 7, 8, and 9. That's where you really want to make sure, because there you're going to get a distinction if you master those topics. So here they're saying under required, open, post to, and balance the following accounts in the general ledger. Okay. So there you got your EMP control, your creditors for salaries, pension fund, you've got your salaries expense, and you've got your UIF contributions. Okay. Remember that all payroll creditors were paid in full by EFT on 31 May 2015. Okay. So here, can you see what they've given us? They've given us the salaries. Here you can see salaries register. Okay. And there you go. But that's pretty much the same thing as the salaries journal. You can see each employee is there, and and all the breakdown for each one. All right. The information that follows relates to the salaried employees for the month of May 2015. Assume a maximum UIF funding salary of 12,478. Ignore voluntary deductions. Assume that all payroll creditors were paid in full on 31 May 2015. All amounts were rounded to the nearest rand. Okay, so they've done the salaries journal. So this is about posting from the salaries journal to the general ledger. Okay. So here you've got your totals and everything. And fortunately for you guys, they give you these answer sheets, so it gives you a bit of an indication of what you are supposed to do. So here clearly they wanted you to do it for, where is it? Okay, there's my mouse. They wanted you to do this for all of the employees, a summary for all the employees. So we get into the EMP 201. Again, you can see we have the salary expense, PAYE in brackets there. You can see SJ5 for the month of May. Okay, and then we have, if you look there in the salaries journal, where are we getting that amount from? Can you see your PAYE? 38,000. Okay, let me just scroll up a little bit. There we go. Okay, then same thing, salary expense. Why are we calling it salaries expense? Because it's deduction off of the employee. Can you see that? Next deduction of the employee is the UIF, salaries expense. We know that in the EMP 201 is your UIF, your PAYE, and then obviously your SDL. All right? Because that's what SARS is interested in seeing. Okay? Then UIF contribution, how much is coming from the employer? Okay? Can you see that?
Yes.
All right, so you have to have practiced this in order to post correctly. This is where my students fail.
No, we haven't. done this too much. That's
exactly. One needs to have practiced this stuff. They look at it and they say, it's easy. And it is easy. But if you haven't practiced the posting from the journal to the, if they ask you the journal, even just from memory, I think my students can do it. But when it comes to this, the general ledger, that's where it gets a bit tricky. Like, oftentimes you see that this stuff that's on the credit side, they end up, you know? And then obviously here, once you've done this bit, remember, we do this at the beginning of the month or during the month, but we only pay it out at the end.
Yes.
So this bit is easy because all we do is we write bank and the total of what is owed, okay? Remember, this is a liability. We owe these people, okay? Anyway, let me scroll down because I don't want to waste too much time here. Then these other accounts are easier because now creditors for salaries, we know that we are functioning on the net salary that is owed. If you look there under net salary, the total, 114,000. Can you see that? Yes. Creditors for salaries, what we owe all of our employees. There, can you see salary expense? SJ5, we plugged in that. Then at the end of the month, can you see? And I put it there in brackets so that people can actually match. Say, oh, this is net salaries. Then this is how much we're paying out to all of our employees. Okay? It's very simple. It's very simple. But I tell you, because we are discussing the answers. But now, okay, that's what you see. Oh, actually, it's not that easy because I haven't had the practice. Had I had the practice, I would have been fine. Okay. Then here again, we know that there's a deduction for the pension fund, but also the employer is also contributing. You see? So we plug in here. They probably said somewhere in the question rand for rand. Oh well, they didn't actually have to say that because we are seeing the amount. Under deductions, it's 8,800. Then if you look employer's contribution for pension fund again, 8,800. Okay, so we quickly plug that in, and then we know at the end of the month, and you see CPJ. Again, if you don't know your journals, you don't know. You see. All right. So then that is that. Then we come here, salaries expense. Okay, this is the gross salary. Can you see that? Okay, this is the gross salary. Everything we're paying towards. Because can you see those deductions? Yes. That's coming off of your gross to get to the net.
The net is your pure salary.
The net is how much are we paying into their bank accounts. Yes. But gross is all of these benefits. Yes. 100%. There you go. So can you see this we're putting on the debit side? Straight up coming from us. Okay. Then we have UIF contribution. Okay. And then finally we have your, that's it, huh? UIF contribution. SDL. They didn't, that was what I was looking for. Have SDL there. It's okay because they didn't ask us to do that, but
the SDL would probably be the same as the
UIF contributions. So just it would be, yes, just the debit side.
Okay. So it's only when they also talk about the the employee stuff, then it goes to the credit, and then the employees also, because you're balancing, you're paying them that. I mean, like with the previous two.
So let me scroll up.
Like yeah, like that.
Ish, sorry, this could. So you're talking about here, right?
Yes. So just to make sure. So everything here, this side, is because we are, how can you say? How did I state it now?
You said it is coming from the employee.
Yes, that's coming from the employees. Is that why it's going that side?
No, it's on the credit because it is money that is owed.
Yes.
Can you see that?
Yes.
This deduction, we're only going to make the deduction off of the employee at the end of the month.
And then that's why then we pay it once.
Yeah. But it is due from the beginning of the month. Does it make sense? Yes. So it's owed. Remember, the credit, this is a liability, basically. Yes. So because it's a liability, we know that it increases on the credit side, decreases on the debit side. Can you see that now?
Yes, I understand.
Now
because I was just wondering why the others also doesn't have the other.
So I'm going to go through each of these.
Yes.
No problem. Because there's no point in me rushing. Yeah. So here again, can you see creditors for salaries? We know that that 114,000 is owed.
Yes.
Okay, but it's only going to get paid at the end of the month. Okay, we owing our employees. Then if we scroll down again to the next one, this one is your pension fund. We owe whoever is managing our people's pension fund. We know that there's a portion that we deduct from the employees, and there's a portion that we contribute. This is the total, the 17% is the total of what is owed for the employees. Does it make sense now? Increase on the side, decreases on the debit side. So you see when we have actually paid on the 31st of May, can you see now this account has been brought to zero? Now we don't owe them anything. Moving into the next month of June. Does it make sense?
No, I was just wondering because the next couple ones we only have straight to the bank.
Aha. Now, can you see here?
Because we don't owe anybody anything. So it's just a straight deduction.
It's just a straight deduction. Can you see that? Because it's an expense now to us. Makes sense.
That was just the part that I was wondering.
How come? And can you see this is now? Again, this is also it's what is our contribution. So it's an expense to us. It's money leaving us. Can you see that? And that's why we debit it. So we don't look at these as liabilities. Here, the UIM contribution or the salaries expense, because it's an expense to us. Does it make sense? That's why it's on the debit side. And if you check, you'll find that when you add up all the other deductions and also the salary expense, you'll see that this is the equal debit for those credits. So can you see the double entry taking place?
Yes.
Exactly. Makes sense.
And it was just that because like I was thinking with the UFE, there's still somebody here.
Yeah.
That's what I was.
No, you know the very question you're asking is the very thing that confuses most students. And again, it's just like you said, you haven't had much time with it. So it's just about getting that practice in. This is question 6. This is the last question in this paper. But then I just want to discuss question 2 as well before I let you guys go, at least, and then we'll talk about question 1, because question 1 is just theory. So if you look at question 6, they've given you the pre-adjustment trial balance. Sometimes they call it pre-closing or pre-adjustment trial balance. It's just the trial balance before we do our closing transfers. That's all that it is. Okay. So here they've given us a trial balance. Cool, no problems. We're comfortable with that. The following pre-adjustment trial balance appears in the books, all right, at the end of their financial year. Ignore that. Okay, no problems. We're cool. Right, then there it says, under required, it says, journalize the closing transfers for the trading account only. Can you see that? I told you that they can't ask you everything.
Yes, because there's not much time.
There's not enough time. No narrations required. Okay? Hint, remember to calculate the gross profit. Remember, what is a trading account for? It's for calculating gross profit. Okay? So there they're giving you even a hint. Then the second bit, they're saying prepare the capital and drawings account only in the general ledger. All right? May 2015, including all closing transfers and properly balanced. Okay? So they want us to properly balance the capital account and the drawings account. All right? Assume that the net profit per the profit and loss account at 31 May was 295,130. So they've saved you some time, because if they didn't tell you that and they're asking you to do the capital account, you would have had to calculate net profit yourself. Okay? So they've saved you some time. Now you don't have to go and say, what is the total of all my income? What is the total of all my expenses? Now you can just use that net profit. All right? Then they say draft the post-closing trial balance as at 31 May. Okay, cool. So we know exactly what they want us to do. So first thing, this is where now your process must be in your head, because here obviously they don't give it to you. So first thing, we know that, okay, what we want is the trading account. But before we can get to the trading account, we need to close off, first thing, sales returns to your sales account. And we're doing this in the general journal. Last unit we did. Okay? So we know that, okay, sales returns throughout the year, it's an expense, so we're debiting. So to close it off, we need to credit sales returns. Okay? And we know we're closing it off to the sales account. So then we credit sales returns, All right. When you look in the trial balance, you'll see that it's that 37,070 rand. Then we know it's going to the sales account, so we debit sales. Happiness there. Now we know next step is to close off sales to the trading account. Okay. So we know that sales increases on the credit side throughout the year. So to close it off, we need to make a debit of sales. But then we also know we had sales returns that we closed off. So it's going to reduce how much sales we have. And that's why you see here a minus 37,070 rand from the balance that we get on the trial balance, which is then your 842, 270. And that's how we're arriving at the 805,000. Can you see? If you've never done this before, what are you going to do? You're just going to say 847, 42,270, and you're going to debit it. So you might even have the process correctly, but because you haven't practiced, then you make a small blunder like that, you see. So you've done that, and you know we're closing it off to the trading account, so we're crediting trading account. Cool. Now, can you see, now we can get into the trading account, okay? So we come now to the trading account, we say, okay, side is greater. We know that the credit amount, this 805,000, you could quickly do a T account if you wanted, and you know your incomes are going to be on your credit side, and your expenses are going to be on your debit side. Because I told you guys, treat it like an income account, you know? So we know, okay, 805,000 is obviously greater than your cost of sales. Sorry, I forgot. We have to first close off cost of sales to the trading account before we do the trading account. Right. So we know that 317,900 is your cost of sales. Cost of sales we know is an expense, so we're debiting it the whole time during the year. To close it off, we need to then credit. Okay. So we do that. We credit it, and we know equal and opposite entry, and we know we're closing it off to the trading account. Happiness, we're done with that. Now, since, like I said before I record that we need to quickly do the cost of sales. We then now need to say, okay, which side is bigger in the trading account? Is it the debit or the credit side which is bigger? And we can see that 805,000 is obviously greater than 370. Okay, so we know, okay, to close off the trading account, we need to debit the account because it has a bigger credit balance. Does that make sense? So then we say, okay, cool. So that's 805,200 minus the 370,900, and that's how we're now arriving at the 487,300. And we know that we're closing off the trading account to the profit and loss account. Can you see there? We treat the profit and loss, I told you guys, treat it like an income account as well. And can you see we're crediting that? So the incomes on the credit side, can you see that? Okay, dealt with that. This is just 14 marks, just this. Can you see? But if you don't know your process, forget about it. You've just lost 14 marks. Because you won't know, I need to do all of this before I can actually do my trading account. All right? Cool. So you've collected a cool 14 marks there, you know, just from jumping in the general journal. Okay? Then we go to the next thing they say, prepare the capital and the drawings account. Okay, cool. No problem. No problem. So you see, this is the part where we would have now closed off your incomes and your expenses to the profit and loss account. So there we would have calculated if we made a net profit. So they fortunately helped you skip that, you see. So that's why I'm saying, if you don't know your process, so since I know my process, it's like, okay, I know now, since I already have net profit, I can jump straight into the capital account. I don't need to begin to first calculate that net profit and stuff like that. So.
But Joe might still always ask you to do it.
Yeah, they could, depending on how much time they've given you and how long the other questions are. You see, because obviously they need to make sure that, you know, you have enough time. Reasonably enough time, yes. So here, you obviously start off by throwing in your balance, all right? So you see that off of your trial balance that they gave you. Throw in the balance on the credit side, 452,650. Cool, no problems. Next thing that you say, okay, I know that I made a net profit because they gave us that information of 295,130. So that I need to credit that, okay? Profit and loss, no problems. All right, because this is increasing the capital. All right, so we need to plug that in. If we had made a loss, we would have debited that because it's going to reduce your capital. Then we say, okay, cool. Before I can calculate my new balance for capital, I first need to close off my drawings account. Okay, what was our balance? Opening balance for drawings? 2,200. And now I'm closing this off to the capital account, so I quickly credit it. Equal and opposite. See, the general ledger is easy. It really is easy because it's always just equal and opposite. With the general journal, you have to think a little bit to say, okay, cool. What am I debiting? What am I crediting? And why? Okay. But yeah, it's also easy. It just requires you to have practice. That's it. This one you can kind of, you know, if you know your process well, you can kind of get away with it. Okay. But the thing about it, here's the funny thing, why I'm actually contradicting myself there. Because to master your process, you need to practice. Yes. So there's no running away from it. Yes. So then there you credit the capital account 2,200. We know that this happens in the general journal. That's why you can see GJ 5 there. Can you see GJ 5 everywhere here? Because we know this is closing transfers and it only happens in the general journal. Okay, so we close off our drawings. Since we credited there, we know we have to debit here. Another way to think about it is, I know that drawings reduces my capital. So obviously I have to debit it because I know my capital increases on the credit side. Boom. Then you say, okay, what is now my new balance for capital? Say, okay, I know my creditor side is bigger than my debtor side. Okay, so whatever I got on my creditor side now minus the 2,200. And then we get our balance carried down on the other side. On the credit side, we now have our balance brought down. And we're done. And we're done. Okay, and that, how many marks? Let's see. Okay, no, we're not done. We still have to do the post-closing trial balance, but we'll do that now. Okay, if you've gotten this far, post-closing is easy. Okay, we have our new capital balance. That's all we need. Everything else is copy and paste. As soon as you have your new capital balance, it's fun times, fun times. Okay, so if you remember that process, that document I gave you, that slide, we know that with a post-closing trial balance, all that we include is the new capital balance, which we have there at the top, and everything else, plant and equipment, furniture, etc., all is just copy and paste. And then we just leave out. And you're done. And you're done. How much marks for the post-closing? That's 9 marks. Okay?
Basically for being basic.
Exactly.
Even if you don't even understand it, you can just try to leave out your capital and just copy and paste the rest.
You see, you're probably going to get something. You see? And then under folio, you're copying what you see in the balance sheet. Sorry, in the trial balance. All this B10, blah, 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 and so forth, so forth. And then you just need to remember, I leave out also my income and expenses. And then you're done. And then it should also balance at the bottom. And you're home and dry. See? So, yeah, this stuff really shouldn't be too hectic for you guys. And you see, that's why I love it. I think it's actually interesting. You know, I find it actually interesting. So, yeah, but anyway, maybe I find it interesting because I'm not the one writing.
No, I always like accounting, but
yeah,
sometimes sitting here in a lecture, that it just confuses my process. And then when I get to it, you know, like let's say this afternoon, I sit down and I do it, and then maybe something doesn't click. I watch a video, then I understand it again.
No, man.
I physically have to do them, otherwise I don't understand.
No.
If you said.
If you're not doing them, there's only so much you will understand. You need to practice, and then certain things will click. Oh, that's what he meant when he said that. You know, it's like with all of us. You know, even when I was studying and stuff, same principle.
Because I know some people that can, you know, just from discussing, they can understand something 100%. But me, physically, especially with maths, you can talk to me, I won't understand. But if you put it on paper and I have to do it like that.
But here's what I'd actually throw in. I fully agree with everything you're saying. I'd also let you know that even those who can understand and do it, they must stop. If let's say they get 70 from just listening, they would get 85, 90 if they actually practice as well. Because then it really sinks and it sticks. Because remember how we ask the questions. We don't ask you to copy and paste the same exercise. We're going to throw in some tricks there just to see.
That's why I said if you're not familiar with it,
Oh
it's
my.
a curveball.
It's a curveball, 100%. So here, question 2, it's a VAT question, 10 marks. Okay. How many marks was that in total with the profit and loss? That is 35 marks. So can you see 35 marks? How much was that other one?
35 and the
previous one was 30, so that's 60, and then we calculated the other two to be 80. So can you already see you are sitting at 60 plus, that's already 140, 145. That's pretty much your whole paper. So can you see what I was saying? Journals, here they didn't bring accounting equation. I can see they didn't bring accounting equation. But if we were to, in most papers, accounting equation, journals, unit 7, individual debtors and creditors, and then unit 8, salaries and wages, and then profit and loss. From there, for sure. So from there, can you see 100 and something marks already? If you don't know that section of the work, there's no way you're passing. You see. Yeah, anyway, so let's get into this. So here they literally, what are they asking? They say complete the following table by marking the appropriate column in your answer booklet with an X. Assume the business acquires the considerations listed and that the business itself was invoiced in all instances. Where applicable, assume that all parties dealt with are registered VAT vendors and that the VAT Act has been adhered to in all instances. Okay, cool, no problems. So here all that you want to do is just mark what VAT category. All right, so trading inventory, we know that's standard rate. Rate portion on rates and taxes, we know that that is exempt. Petrol, 0 rated. Life assurance, exempt. Remember, life assurance is exempt. But what do you call it? Short-term insurance, that is standard rated. Because remember, if I have an accident with my delivery vehicle or my factory burns down, I cannot operate without those things. So then I should be able to also claim VAT on those things. Okay. White bread for staff lunches. The moment we see staff, we know it's non-allowable. Okay, brown bread, we know it's 0 rated, like fruits and vegetables, because we don't want to make things too expensive. Exactly. All right. White bread purchased by the restaurant with the purpose of making burgers for resale, they're standard rated. Okay.
Very much like for that ice toast.
This is yeah. This is, I think, I forgot what activity in your textbook is in there. Is in it also? Yeah. And that's why you know I do this, because I know somewhere they're going to test you on these categories. So we spoke on white bread, water and electricity bill, standard rated. Sorry. I have to drop this. Okay. Oh my goodness. Okay, let me tell them to call me back. Hello? Yes, sorry, I'm just in a lecture. Is it possible for us to talk at 1? Okay, no problem. No problem. Thank you so much. Bye.
So may I ask, why did you put the question marks? Office and bus ticket.
I'm not sure.
I know, because that's office entertainment, office refreshment. So.
Oh. So maybe I was just trying to highlight the fact that office refreshment can also be looked at as staff lunches.
Okay.
So maybe I was just trying to make sure that I take note of the fact that they can use these terms, either one of those terms. So then, then office refreshments not allowable. Doctor subscription. Remember, I told you guys every professional subscription that you need in order to practice architecture, dentistry, whatever, is standard rated. Bus tickets, okay, it's public transport. So again, that's also you're not allowed to claim. It's not for business per se.
I remember the only exception was like when we were talking about jet fuel.
Jet fuel was, what did we say it was? It was standard, huh? Yeah.
Because it says that was in the textbook.
Yeah. So yeah, that's 2015 for you. I think we can just browse through the theory.
It's also funny that it's the most simple concept, but it's going to help you not a lot in the
man. Because the other thing about it is, they ask you those questions. Sometimes they'll tell you to do calculations on certain things. If you don't know which that category should be, you can't do the calculations. You're going to get them wrong. So it's one of those you just can't run away from it. So here with question 1 is really just a theory question. I browsed through it earlier. They were just talking about, you've got a friend, he knows you studied accounting or you're a bookkeeper. So he's obviously just asking you these questions. And a lot of it they're asking, okay, so for instance, her bank manager has asked to see a copy of her latest financial statements, and she was wondering why this was required. Please explain to her briefly why a bank manager, lender, would be a user of financial information. So can you see this is our unit 1 now? And then the next one, they're saying, in putting together the financial information for the bank manager, she used outdated information, excluding all financial transactions during the past 12 months. The bank manager said that her financial information lacked timeliness. Okay, what did the bank manager mean by that, and why is timeliness important to financial information? Okay, so I'm not even asking you questions, I'm just bringing them up so you guys can see, okay, these are the type of questions they ask. Timeliness is a qualitative characteristic of financial statements. List 5 other qualitative characteristics. So they're understanding, what is this? Comparability. What is the other one? What other ones do they have? Reliability, faithfulness, you know, those type of things. Next one, she wants to know the steps to follow from issuing a source document to preparing a trial balance. This is the bookkeeping cycle. Hint, list the missing steps per the accounting cycle. Okay, it's actually the bookkeeping cycle. The accounting cycle, you're looking at the year-end stuff. So you know you got a transaction, then you get a source document. After source document, you know we then enter into the subsidiary journals. Subsidiary journals goes into the general ledger. General ledger, that's when we have a trial balance. You see. So we need to know the bookkeeping cycle as well. They love those type of questions. I think they asked it in your test. Well, I know I gave you an ICE task. I don't think they asked it in your test. Might have been in your assignment. I don't know. Calculate the assets, equity, and liabilities in her business by making use of the accounting equation. Okay, so all right. Cool, no problem.
These questions always a little, too much of the paper usually.
No. I mean, there you can see it's 25 marks. Okay, just scrolling down a bit more.
Because I mean, theory can sometimes hit you.
Hey! No, it can.
Especially because you're just focusing on working out
and
understanding all your.
Exactly. For me, if you've been doing your thing during the semester, really working, now it's just about polishing up here and there, making sure you know, okay, the bank column is inclusive of that, that is exclusive of that, etc. Then you go back and you start to go through the slides for theory and also just read through unit 1, 2, and 3. Because that's where they usually pull their theory from, 1, 2, and 3. Then you should be good. Then here they have their accounting equation. Started the business by contributing 20,000 in cash from her savings account and obtained a loan from the bank, 50,000. She bought computers amounting to 25,000 on credit. Show all calculations. Okay, so there you can see. That's how we do it. They're basically asking you. So I guess this is why they didn't ask the accounting equation, because they threw a little something in there. Then 1.6, last question. What would the impact on the accounting equation calculated in 1.5 be if the bank charges her 400 interest and she repays 5,000 of the bank loan? Okay. So there now, can you see they're testing? Do you understand double entry? Because you know that interest, this interest that must be paid, it's going to affect your bank. they say here, it's going to affect your bank, and it's also going to affect owner's equity because it's an expense. Okay? Then the next bit, with the 5,000 that was paid, again, it's going to affect your bank, but now it's going to affect liabilities. So they're testing. Do you understand double entry 1, 2? Do you also understand?
Technically, to answer it, must we, in like let's say the test, we answer this. Must we put assets again, or can we just do something like yours and it will be understandable?
Can you see mine is very clear?
Yeah, no, that's what I'm saying. It's under.
Yeah.
So that's
as long as it's
like
very clear, then it's perfect.
Okay.
But if a mess, then I just say
it's better to say assets.
Yeah, and it should be fine. But yeah, that was 2015. Hey, that was 2015. So yeah, I don't know if you have any additional questions or thoughts.
Pretty fine with the stuff we did.
Yeah.
Just more practice.
Hey, you can never get enough of that.
Because that's what I remember from maths also. It was always practice.
Mm-hmm.
Remember a formula and then practice.
Yeah. And you'll be good. You'll be good. Okay, here we go. So now we can kill this recording. Did I have anybody else in this class?
There was not somebody else.
Yeah, I see there's one.
See something. Oh, this.